Let me now bring on board Choksey, Managing Director of Choksey Securities, who joins us live from his Mumbai office. Morning. Thank you for joining us. We've seen a roller coaster ride in last 8-10 days. First, a big breakout, then a crack, and then yesterday we saw a powerful recovery.
Yeah, Nikum, good morning. Well, I think yesterday's recovery is largely attributed to the jump or sharp jump in the stock price of Reliance, which is carrying heavy weight onto the indices. And that's where I think probably we saw Nifty crossing above 6,750, 6,760, which was by and large an expected level, I think, for Nifty to cross above. Reliance definitely, I think, has added to the momentum for the market, led by some amount of short covering, and at the same time, I think, fresh position which got created due to higher allocation of weight by some of the hedge funds. I don't see, I think, too much of a sustaining power as far as I think Reliance goes. Maybe I think 840 odd levels, at which I think Reliance possibly I think would face some amount of headwinds and could probably slow down from this level. I'm not saying that it can't go up, but I think it could slow down from 840 odd levels, and that could possibly cool down the index as well. Maybe also consider the fact that we are having the expiry week in FNO contract for the month of May, and it is likely that I think we are going to see the expiry on a stable note, I think somewhere around above 6,000 levels. So from that perspective also, I think a lot of short covering led buying took place into the market yesterday. I believe that the index would range bound in the say 1500 6100 zone, and probably for it to go above 6100 it would require some major boosters in form of I think sustained long-term buying happening into the market, which I don't see emerging right now. So I think range bound movement of 1500 1600 should continue, and I think action should be within this range by and large.
Vivin, let's start off with Coal India's performance, because the market is going to react to this one. Good numbers coming in.
Yes, I think the numbers are certainly good. Not as much on the volume side, but certainly I think on the profit side. And as one could possibly see and validate, the cost has come down. This has surprised the analysts, I believe, largely, because I think this was probably, I think, has come as a very pleasant surprise on the cost front. One would like to see the commentary coming out, whether I think it is a sustainable kind of a experience going to be in subsequent quarters, or it is going to be, I think, one of kind of a impact, I think, coming into the book. So I think one will have to see, I think, on all those three fronts, I think, where the cost reduction has taken place, whether it sustains. But yes, I do agree that Coal India kind of a company with good performance, and if sustainability is found, then possibly I think it would give solid support to the market and the momentum in this space, particularly going forward.
What are your thoughts on pharma as a group and Wockhardt in particular?
Well, Nikunj, I think the pharma space on the valuation side remains expensive. So from the perspective of buying fresh into the portfolio, unless you have a larger conviction on a particular company, is something I think one would be little careful about. I would rather think that I think within the pharma space, few companies where the growth tractions are likely to be experienced or seen. Of course, I think Sun Pharma is on buzz for an inorganic growth or an acquisition in Germany. So on that front, I think one could possibly see the company with a little bit more amount of hope and the optimism as well. Otherwise, I think within the other pharma space companies, we personally prefer the likes of Glenmark because of, I think, the milestone payment related income, lower debt and the resultant interest saving cost. And these are some of the developments which could possibly propel at least 20-25% kind of a growth in current year as well. So would think that I think few companies like Glenmark or Sun Pharma would remain within a good bracket. Of course, Cipla, the results are due, but I would think that I think I would watch the result and then probably take a call on the company. They have the solid pipeline of NDAs, but the fact is that I think if the result gives some amount of negative surprise, then probably would like to buy at lower levels. So I think these are the 2-3 stocks which we prefer to consider into pharma portfolios.
Devin, is it time to exercise some caution in some of these consumer names? Yes, the big picture argument is strong, Indian demographics are supportive, but valuation also are looking slightly stretched. Look at the P multiple for a company like Nestle. It is trading at something like 45 times. Yes, Devin, you heard me right. 45 times based on FY15 estimates.
Yeah, Nikunj, you're so right. I think most of the companies are extensively traded, and a higher valuation is certainly preventing the new buyers to come into this particular stocks. Those who are holding on to it, they feel happy because their cost is at the lower end, and at the same time the valuations are though high, but at the same time I think the companies are growing reasonably well. But to buy afresh, I think certainly it's a challenge. Well, I would think that it all depends on how the market pans out in coming days and coming months. In absence of any meaningful opportunity, I think the larger amount of money is basically going into risk aversion, and that's where I think many of the FMCG companies are being looked at very favorably. Of course, the story goes around for delisting, etc., but I don't find too much of substance in the larger part of that story. But the fact is that I think you need to have the larger confidence coming on to the other markets. If they are not coming up, if other sectors are not being seen favorable, then in such situation you will see the money pump getting deployed into the pharma and FMCG kind of counter. IT has slowed down to a greater extent, and as a result of which people don't find too much of fancy in IT, but pharma and FMCG people do find fancy because of this risk aversion. They are putting in money at a larger rate at the same time. But another point which I would like to add here is most of the long only funds are not considering at higher valuation. The larger amount of allocation into pharma and FMCG currently is also happening from the hedge funds who are basically taking trading bets and doing the weight allocation based on the risk aversions. So that is where I think you are seeing the larger P and the factor of valuation. I would stay away from buying afresh, but hold on to existing investment which is done at a lower levels.
Even you track Reliance pretty closely. After the new gas find that we saw in the KG-D6 yesterday, the stock jumping up a good 4%. Do you think there's further headroom in the stock price in the near term?
Well, I think if you convert the new gas find into some kind of a gas reserve and the resultant impact into the stock valuation, you find that I think 0.8 TCF at the base level and the 0.3 TCF at the worst level, I think kind of an output or kind of a reserves I think that one could talk about from this new find. Of course, the output would take another 2.5 to 3 years to come out. But if one takes into account, I think this reserves, then extrapolate this into the numbers, probably one finds that 11.70, 11.80 rupees per share kind of a valuation accretion coming in because of this new gas find as far as Reliance is concerned. Certainly, I think it's an important news, but at the same time, I think it would largely depend on the production volume going up. And second important news is then when it gets announced about the gas price hike. If the gas price hike does take place, then in such situation, it holds the potential to add another 2.5 to 3,000 crores kind of a profit jump based on the suggested price of 6.7 per MMBTU. So I think that's where I think the stock is driven up. I would still think that the Reliance is in a trading range of 770 and 840. If it crosses above 840, then it holds the potential to go up to 860, 880 levels. But otherwise, I think it remains in this range for some time. At least I think till the time we see larger jump happening into the profits.
Even the street is divided on telecom stocks. The bulls are of the view that the worst of the policy action in telecom is now behind us. The industry has got consolidated. Existing companies are enjoying pricing power, and the only way telecom stocks could go is up. But the bears are of the view that the regulatory risk is not behind us, and it will be a while before companies like Bharti and Idea, they will be able to really reduce the debt burden.
Well, Nikunj, I think I have another view, and that is a fundamental view on the voice telephony business itself. I have expressed it before also. I find that I think in the voice telephony business, it is more or less a commodity business. Even if believing that regulatory hurdles at some point of time would go away or recede, and at the same time, I think more amount of clarity and transparency would come in every aspects of the regulation. Still, I believe that I think the voice telephony business is more of a commodity business. Certainly, I think the amount of premium that one has enjoyed in past, I think is the matter of past itself now. It cannot be seen further. Our habits are changing of communication, and more of a communication is expected to go into the data communication. And that's where I believe that vis-a-vis voice telephony, I think it is going to be a data telephony, which is going to be, I think, driving the ultimate interest of investors into the stocks. And then when you find, I think, any of the data telephony company getting listed into the marketplace, you would find, I think, better amount of follow-up and the investor interest into it. and Reliance Jio could be one. As in when they unlock this particular company from the main parent company, at such point of time, I think you should be seeing interest coming into that business. I am certainly keeping myself away from voice telephony, be it Bharti or Idea, though at times I think it makes sense to buy some of the company, but it may be very short term. It's not a business call that one could buy.
At the current juncture, what is your number one contra idea where you are leaning one way and others are going the other way?
No, Nikunj, I think honestly, I think no contra ideas per se, but I think the conviction is staying large with some of the good companies, and Raj Industries, I think for one, I think which we have been liking, it is remaining little bit more positive now. As we know that the government is planning to basically, I think, make it mandatory now once again, determined to make it mandatory to increase 5% ethanol into the petrol. And that could possibly start once again, I think, a new business activity for companies like Praj. Of course, I think it's a long gestation period. I think after which you get the order, it takes time. But should this particular move get accelerated, I think the company like Praj could possibly, I think, do much better. At the same time, the farm waste-based ethanol, I think, which the company has invented the technology, probably you are going to see much more actions coming in that particular direction, and along with the water management business. So I'm relatively more positive into value-added, value-accretive companies like Praj, which should possibly do wonders, I think, in the portfolio if some of the orders succeeds going forward in coming years. So I think one could hold on to this stock into the portfolio or buy more at these levels.